Welcome to the Construction World webinar series, the Real Estate Challenge. I hope all of you are keeping safe and healthy. You just heard the Prime Minister extend the lockdown now to 3rd May. And obviously he says that he will take a call on the 20th of April on certain areas and certain activities which can be opened up, provided they are not in hot zones. So let's hope this additional 3 week of lockdown is going to bring us some relief at the end of it. Here we are to discuss an area, real estate, and real estate contributes 8 to 10% of GDP, India's GDP. It was projected to reach $1 trillion by 2030 and contribute 13% of our GDP by 2025. It's become very attractive to overseas investors too. In 2019, around $6.25 billion, have come into the country. In retail, we had 1 billion. The Prime Minister Awas Yojana, nearly 7 crores houses were built by May 2019. We've got REITs come up. So it's been real estate has been, despite its little gloomy scenario currently, has reached a great position globally, Indian real estate, and we are here to discuss the challenges which have now come with this pandemic. I'll take you through a few slides. Yeah. So let me introduce our panel. We have a very illustrious panel here. Mr. Dhruv Agarwala, he is the group CEO of housing.com, makan.com and proptiger.com. Mr. M.R. Jaishankar, Chairman, Managing Director of the Brigade Group. Ms. Sangeeta Prasad, Managing Director and CEO, Mahindra Lifespaces. And Mr. Ramesh Nair, CEO and Country Head, India, JLL India. Let me introduce myself. I'm Editor-in-Chief of Construction World, founder of ASAP Info Global Group and First Construction Council. I also head the Smart Cities Council India. Construction World has been running for 22 years, plus extensive readership across 800 cities, largest circulated construction magazine. Some of the digital services that our company provides, and especially useful during such times. Contact details provided here. And of course, this 21-day subscription will probably get extended or will get extended till 3rd May. So you can register for free here and avail this offer. Before we go on to the agenda, there is a poll question that I would like all of you all to take, since work from home has become, the regular feature today, and it will go on now till the 3rd of May. Is work from home a viable option when we are back to the new normal? So when we are going to get back, is work from home going to continue to be a viable option? So the poll can be answered by a panel, which all attendees are provided. You have to just say yes or no, and we will know instantly the results. So please do share your opinion. So before we get into this agenda, I wanted to just play a video from our sponsor. 30 seconds. Okay, back to the agenda. Okay, we have poll results. 60% said yes and 40% said no. So that means there are people still believe that 40% feel that this is going to not continue, it's not a viable option, but 60% feel that it is a viable option. Great. Okay, let's go on with the agenda that we have here for you. So we have real estate was suffering even before. So, pre-COVID, real estate wasn't in a great form in any case. And we had, the government had introduced a 250 billion rescue package. How did that turn out? I mean, can I ask Ramesh to come in here, and what do you think? This 250 crore was brought in to actually complete a lot of unfinished projects. So how did that turn out?
So Pratap, approximately 4.5 lakh units have been stalled or left incomplete. And to complete this, at least the last mile funding which was required was 55,000 crores. So in that 55,000 crores, the government felt that at least 25,000 crores would be creating. I think the government has done a very good job, including the fund manager who runs that fund. The speed at which they have moved has been quite unprecedented. When this fund was announced by the government, the general feeling is a lot of government things take time, but it's happened in a record time. Within 2-3 months, the entire fund was set up, the money was in, and they've also started disbursing. So I think overall a good thing. But more than this, I think what the government also need to do is start thinking of a one-time settlement, which is required for the industry. We did that in 2008, a one-time settlement from loans from NBFCs, from the banks. That's must for the industry. Second is interest subsidy. The government should, right now you have interest subsidy for small affordable housing homes, but that needs to be kind of rolled out for the entire real estate sector. The third thing what the government can do is, right now this last mile funding is only available for the government AIF fund, which the government has set up. I think the government should open this up and change rules accordingly to let private players come again for the AIF last mile funding and have the same approach of LIFO, of last in first out. If they could do this for the private players, I think there would be a lot more capital coming in, and there would be a lot less projects which will be stalled or letting incomplete. But overall, the government has done a good job by announcing this and getting it set up in record time.
Okay, thanks. Interest rates have been brought down over last few RBI policy meets. In fact, continuously over last year, we saw interest rates come down. So would Dhruv address this part? Has that how has that improved the sentiment? What do you see transaction wise? Has that shown some uptick?
So Pratap, if I look at price changes over the last 5 years for residential real estate, and I look at interest rates, I would say that prices in most markets have more or less stayed flat, or prices may have come down slightly in certain markets, or gone up slightly in markets, but more or less, other than maybe Hyderabad, which saw a jump for other reasons, most of the markets have been flattish. Couple that with falling interest rates, although the transmission to home loan rates have not been to the extent it could have been, from RBI repo rates to actual home loan rates. Despite that, I think home loan rates are almost at a multi-year low. So given both pricing being flattish over the last 5 years, interest rates being at a multi-year low, and also we've seen wage inflation over the last 4 or 5 years at a clip of about 8 or 9%. I think it's as affordable a time as it gets for people to buy homes. But despite that, what we saw as per our own data, which we publish on a quarterly basis, we are yet to publish our numbers for the first quarter of this calendar year. But last quarter, which was the quarter ended December 2019, we saw a year-on-year fall of 30% in sales for residential homes in the top 9 cities, and launches came down by about 44%. And I've seen reports from other organizations for this quarter, or when I say this quarter, meaning the first quarter of this calendar year. And again, we've seen reduction in sales year on year to the extent of about 25%. So clearly there is a crisis of confidence amongst consumers, and flat prices, low interest rates, and higher affordability has not resulted in the kind of uptick in sales in which we had all expected. So I think this could be fixed to a large extent once people start seeing homes which are under construction getting completed and actual deliveries taking place. I think that will bring back confidence in the market in order for sales to start picking up.
So at this point, I want to ask Mr. Jaishankar, because you've just concluded your last financial year, and I think what we got to hear was that there was a much better performance of your company. Would you like to say that how maybe that has got some effect from this rate revisions which have come about? Mr. Jaishankar, you need to be, please unmute your mic.
Morning, Pratap, and also
Yes.
Good morning to all the people who have joined this webinar. There are two things. First, I'll talk about the interest rates. Interest rates is on two things. One is retail loans, which the banks are passing it on fairly in a quick time, and those who have not yet passed on will do so soon. But as far as the businesses are concerned, like real estate developers, the interest rate changes will not happen in double quick time, primarily because most interest rates are linked to MCLR rates. MCLR rates need to be reset either once in 6 months or once a year, or sometimes it is based on every drawing of the loan, every drawal of the loan. And in some cases like NBFCs, they're not linked to any MCLR or RBI rates. It is more based on a negotiated rate between the lender and the borrower. So that way, for the developers to get benefit, it depends on the reset dates of the loans by the developer with the financial institutions, banks, and others. So that way, it may take some more time to see the benefit of interest rate reduction to the developers, but it is a much needed requirement reduction of interest rates. Otherwise, the industry has been going through tough times. Coming to Brigade itself, thankfully, we have done the year passed by FY20 has been a very good year for Brigade, both in terms of residential sales and leasing, and for that matter, even our hotel occupancies were high, and the retail malls have done performed very well. In fact, we have seen, you may be surprised, we have seen a 60% jump in our sales in FY20 compared to FY19, which could be, you may try to call it, or Dhruv may try to call it more as an aberration, but we are happy about it, and we are primarily focused in south of India. So that way, it is good. It's been good for us, and we need to see what the coming year is going to be.
Okay, I want to ask Sangeeta, Prasad on this. We've been talking to other developers, and we find that they're unable to bring down prices even if they tried, because the ready reckoner provisions and other issues connected with collateral valuations make it impossible for them to do so. Do you think that these are all artificially, set, which actually helps maybe collect property taxes better or various other issues, but then it is coming in the way of this better pricing of property?
So first of all, before I go to the reckoner trains whatsoever, I think last few years has shown us developers very humbly that market is determined by customers and not by us. So if that is the case, if you see in the last 4-5 years, and I think Dhruv alluded to it a few minutes back, that pricing has been fairly flat in the market. And a buyer's confidence is not just based on the price of a product, but also on many other elements of macroeconomic development, the trustworthiness of the developer, what is their affordability, what kind of product do they require. So there are many levers which enable a customer to buy, and not only pricing. Of course, pricing is a temptation. It is a catalyst which helps close the transaction. Now let's come to what has happened to prices in the market in the residential space specifically. Residential space pricing, as it has remained flat, some of the states, as we all know, have done some corrective action on ready reckoner pricing. The other thing which is happening is that 10%, that buffer which we have, which helps us to kind of rationalize our price if we want to. But please, let's look at also what's happening at the supply chain level. The pricing of products and services which go in making a house, making a building has not gone down. So there is this, if I may say, we are all straitjacketed. Ultimately, market is the king. It will determine what the customer will buy, and we will need many more levers than just the pricing, because I'm sure we are smart people. We go and reach out to the customer, and if the customer is willing to buy, we shape our pricing and the services and whatever we want to offer to them in a smart and clever way so that the customer buys.
Okay. Let's look at one more, since we all talked about pricing. Just a poll question again. If real estate prices corrected by 30%, now, and that's maybe part of a wish list of everyone, but we're just saying, just to get everybody to talk about this issue, would you buy? So again, look at your panels and please vote for this poll so that we know what the sense of the house is. So while everybody votes, I am now opening up the situation post-COVID, which is, so the impact of COVID-19 could result into substantial decline across the sector, and there can be a severe drop. And although Dhruv mentioned that there was a big drop even last year. So that is one issue, and we are also seeing that are there ways that this can be opened up in terms of construction. So Ramesh, what do you think? I mean, what is now we have already seen what impact it took place last year, and now we have this pandemic. What kind of an immediate impact of the cuff you feel is likely to hurt?
Yeah, Pratap, firstly, we need to remember that I don't think any real estate market, maybe 2-3 markets in the country have maybe fallen by 30%. So the information that real estate residential markets have corrected 30% is wrong. That happens in the stock markets. You lose your value in one day by 20%, 30%. It doesn't happen in an asset class like residential. Maybe a couple of markets in north of India where prices have corrected that much. Otherwise, we've seen most markets in the country prices increase even in bad times by 1%, 2%, 3% over the years. So that's one. Secondly, it's very important to look at from the last downturn to this time, what is so different. So last time when prices corrected, one also needs to remember that the number of sales doubled. So if you look at the sales in 2009 versus 2010, it exactly doubled in the top 7 cities. We saw 120,000 units in 2009 getting sold, and that became 220,000 units in 2010. So this is something we need to remember. Back then, valuations were very overheated. it was a very seller's market. Now valuations have become very realistic for residential. It is mainly end user driven. Back then it was a very seller's market. Today it's a very buyer's market. There are a lot more tax incentives today for the middle class affordable home buyer. And again, if you look at the rates today, whatever SBI rates, Mr. Jaishankar also spoke about it, that will definitely get passed on to other institutions also. There'll be competition between institutions to reach that mark, or everyone will go refinance it with SBI. And today you look at the products. Back then, 2008-9, the products used to be very, everyone is doing 3-bedroom, 4-bedroom luxury. Today, everyone is doing what is relevant for the market. So I think there are things, I know there is today who will look at buying residential when there is fear of job loss or fear of salary cut or fear of life because of COVID. That's a definite worry which we'll face over the next 3 months. But I'm also bullish because the residential market, the pain has been going on for the last 5 years. There will be price corrections in different markets, but I definitely don't see a price correction of 25-30% happening in the residential market because the margins are already in single digits. There's nothing left for the developer to again cut the price and move on. So these are my thoughts. I think the next 6 to 12 months, even if the markets correct a little bit, it will be a good time for end users to come in and buy their dream home.
So as per the poll, 72% said yes, they are ready to buy if the price is correct by that much. Maybe
Prices
the price.
I think viewers should realize prices are not going to correct 30% in real estate markets. That happens only in the stock markets, and I would request Mr. Jaishankar also to comment about that.
Mr. Jaishankar, would you like to comment on that?
Yeah.
You're on mute, Mr. Jaishankar.
Yeah, not anymore. Thank you, Ramesh. I think you spoke for developers also. It is only wishful thinking to expect the 30% drop. The exception could be, as Ramesh said, some parts of NCR, Delhi. I won't even call all parts of NCR. Maybe Delhi and maybe some areas of Mumbai may have the potential, but it is unlikely to happen. As you know, from 2016 itself, real estate has taken a beating due to various, I would say, developments of DEMO, GST, RERA. Though RERA and GST are welcome legislations, it has had an impact on the real estate business. That way, the developers have absorbed the inflation of last 3 to 4 years, and now, if one is lucky, we are in a single digit. Profits are in single digit, but going forward with all the lockdown and the COVID issues, we really don't know what the situation is going to be in the months ahead. In fact, we were planning to increase the prices in the month of April, but now we need to postpone that, because ultimately we have to, it's a tough business which takes from the time one identifies a property, gets the approvals, builds, and then gives defect liability period, and subsequently it's a 5 years timeline. Invariably it takes a 5 years period, and during this period a lot of uncertainties will be there, which the developers rightly or wrongly, willingly or unwillingly absorb it, and there is no possibility of prices coming down to that extent, particularly in South India.
So I want to bring in at this point, the other worry that everybody has, a lot of people have invested, building sites were progressing, and then they have been halted now. Obviously the work is halted. RERA has got its own guidelines. Obviously they'll be little lenient, but if we were to restart building, again with this pandemic being there, and with some sort of a restraint that our Prime Minister has mentioned, even after the lockdown, there may be some restraint, workers coming back, etc. How would you actually, think that the work can restart? I want to bring Sangeeta Prasad here to comment on what do you think? How do you think work can restart for continuing completion of the buildings that are already begun?
So the first thing is, I think let's start fresh from the oven. We heard the Honorable Prime Minister speak about Jan and Jahan both. So what I think we could sense that the next few days are going to be critical in terms of determining safety first. So let me put the perspective in place. Safety of individuals, you and me, is first, of all of India. That's what the Prime Minister said. So in the next 7 days, we will get an idea of where all. So it will be a selective start, Pratap, and I think it's good for the country. Even the customers will understand that the selective start is a good thing. And I think we as developers would love to start as soon as possible. Many of our sites, I'm sure Mr. Jaishankar also will resonate with me. Many of our sites, we have workers already who we are taking care of. The only worry I have is that each of them, and especially some parts of the country, are really desperate to go back, because in all of us want to be with our near and dear ones when such things happen. So the other thing which we are looking at is the supply side. It's not only the workers, it's also the supply side, the materials. There's some good news. Cement, cement companies. I think the next few days are critical for observing how the supply chain ecosystem fashions itself to supply goods and services to us. We are there and we are willing to start because it's good for us and good for our customers.
Mr. Jaishankar, what are your plans? How do you see restarting this in amidst all this, lockdown hassles, post-lockdown, let's say? Mr. Jaishankar, you need to unmute. Can't hear you. Okay, let's take another question here. I wanted to move to Dhruv. Dhruv, what do you think about technology? I mean, we just had a little blip on technology. What role will technology
Pratap,
play? Okay. We got Mr. Jaishankar back. Yeah.
See, it is muted by the organizer, not by me.
Oh, okay. So technology.
That is the reason.
Apologies.
So on recommencement of construction, I need to say we are all, as Sangeeta said, we developers are raring to restart. And in our different project sites, we have 9,500 workmen in different project sites, and they're all here. As Sangeeta said, after the lockdown is lifted, we don't know how many of them will go back to their villages in North India. And it's also the harvesting and subsequently sowing season once the monsoon starts. So that way we have a challenge. And we always say November to April is the golden period for construction. And out of that, we are losing 1 to 1.5 months of valuable time. And definitely we want to restart. And as regards the supply chain is also equally important. Tomorrow, from April 20th, if the PM and the government says, partially you can start construction work, but we need to get the steel, we need to get cement and various other materials. For that to happen, those factories have to be allowed to work, and it's a whole lot of people, which means ultimately 75 to 80% of the industries need to be working, because construction is such a sector where a lot of core sectors and other sectors need to support the activity. So that way we need to try and open up the sector as early as possible. And we are all taking care of our workers so far, and we will surely take care till May 3rd. But post that, we have to keep our fingers crossed that they remain in the construction sites.
You're right. I think a lot of industries are also trying to restart steel, cement, etc. But I think we'll run into monsoon, and therefore the delay probably might mean the end of the monsoon season is when really the construction can restart in realistic terms. Dhruv, can we get your opinion on the role of technology during this crisis?
Well, I think, Pratap, we are seeing the role of technology sort of, live as we do this webinar. I think one of the things, which I see happening, during this crisis and post the crisis, I think is a fundamental shift in consumer behavior, Pratap. For example, hundreds of millions of children, if not, billions, are right now going to school and attending college, through Zoom or other technology platforms. I think every panelist here would agree with me that we've been busier than ever, doing Zoom calls, through our day during this crisis. In fact, sometimes one wonders that, if we actually were to stay at home and work, we might end up being more productive and actually end up doing more. So we are seeing that happen. I think adopters of online, food delivery services, grocery delivery services, anybody who was not an adopter earlier has now had to forcefully start adopting these technologies. So I think what we are seeing is that in many instances where people were not adopting a certain technology, not using the net, and not using some of the benefits of what the internet has to offer, I think we've all been forced to do that. The lockdown was initially for 21 days. Many companies went to work from home even before that. And now with another 20-day extension, we're essentially going to be, doing this kind of behavior and, we'll be forming these habits over a 40-day plus period. As we all know, that anywhere from, 18 to 60 days is what's needed in terms of a shift in behavior to form a long-term habit. So I think we're going to see a fundamental shift in consumer behavior, how people adopt technology and how people use technology. I think that's going to require a fundamental shift in the way businesses have adopted technology and also a fundamental shift in business models. I think online education you're going to see is going to become big. Grocery delivery, food delivery, healthcare, many, many things which we did, offline is going to start moving online. I think what that fundamental change in business model means there's going to be a fundamental shift in how businesses, respond to real estate. For example, there are many companies, including ours, which are now thinking as the lockdown opens up, can we actually move many of our functions remote? Do we really need to come to office for many of the activities that we do? Even if it's not a full shift to remote working, can certain functions, can certain processes, can we be remote a certain number of days, etc. How people kind of, respond to going to busy areas, whether they are malls, whether they are shopping centers, movie halls, all will change. So I think this fundamental shift in consumer behavior will drive a fundamental shift in business models, and which will drive a fundamental shift in how real estate is consumed. And I think technology is going to kind of, be a foundation to, all these changes.
Ramesh, I just want to bring in one question since what Dhruv said. Do you see rentals being the more preferred mode than if people are going to defer buying decisions? Is that something that you're going to see during the coming year? You need to unmute it.
Are we talking residential or commercial?
Residential. Residential.
I think, things over the next few months, the most important thing is fear of job loss and fear of salary cut. I think once that kind of clears off, people will, and like I said, the market is very end user driven. The investors and speculators moved out of the market a while back over the last 4-5 years. So renting is preferred, but if an end user, the couple of things pointing towards residential also, like buying. These are times when you need to be at your home during these kind of tough times. Everybody will want to be in their home. So I think it just increases the importance of buying homes. And there have also been some cases in some markets where someone who was detected with the COVID-19 were asked by landlords to move out and stuff like that. So this is these are times when one needs to look into all these aspects, and home ownership definitely helps in the long run. And just for the viewers on this call, I know there's a lot of marketing which mutual funds do. And but one thing, when you're investing in real estate, please remember that your stocks can lose, your entire stock market investments can lose value in 30%. In real estate, if a 10% or a 15% correction has to happen, that'll still happen over a 1 year or a 2 year period through which you can take off. You don't lose that kind of value in 1 day or one hour or 2 hours of trading. So it's a lot safer investment than investing in mutual funds. We've seen in the last, the other day I heard Ruchir Sharma of Morgan Stanley say, if you look at the stock market investments since 2008 and take into account currency devaluation and inflation adjusted, the stock markets haven't given any returns. So I know there's a big machinery of mutual funds which talk about mutual fund sahi and all that. So one needs to be a little smarter and look at some of these investments into mutual funds, taking into account both currency and taking into account inflation adjusted returns.
So I want to see the impact of what planning on home planning. So I think I want to ask Sangeeta about whether home office is going to feature in their plans for the residential homes of the future, and whether gated communities will be also somewhat kind of products which they would consider. Sangeeta?
Yes. I think the first thing is, all of us have realized home is our safe haven. I think Ramesh was alluding to it as well about, we all want to be safe in our lives. So first thing is a home now, and a home is also going to contribute more to what all you do. So just think about it. I'm working from home. I'm spending time with myself at home. I am spending time with my family at home. So the way the home will be designed and will be, I need my personal space, I need my family space, and I need my professional space. So the redesigning or reimagining the home is very important in these circumstances, and that's one. But that's not enough. Also the common areas, how will the visitor management thing work out? I think a duality of physicality of design and the use of technology will be required, and we are working internally on this. So a balcony in Bombay, which had become a real expensive thing because of FSI, suddenly we all want to go and stand in the balcony and look at the sky. Ultimately, we all want to look out because we are all cooped up at home. So can we create a flexible balcony, which, in the evenings you go and have your tea there, and then it kind of shapes up into something else. So the whole reimagining of design of home spaces, which will accommodate other functions, the reimagining of the common area spaces are very, very imperative. And I totally believe that there are many functions today, we have all realized in the last 1 month, which can surely not need to go to office. So the number of offices we have today, even from a safety hygiene perspective, Pratap, we are seeing, let's not open up, like the Prime Minister is saying, selective opening up. We are also thinking selective opening up. So these are some of the things. So the office home juxtaposition will determine how physical spaces will shape up, and that's what we are internally brainstorming, as is also, I'm sure, my friends in the panel.
So Jaishankar, what are your views? What are your plans? You're on mute. No, we can't hear you, Mr. Jaishankar. No, not able to hear you, Mr. Jaishankar. Yeah,
see,
come on.
As organizer, you've been muting me. That's the whole problem.
No, why would we do that? Anyway.
Yeah. Anyway, what I was saying is, while work from home as a concept sounds interesting and is good as an option, maybe once a week we don't mind working from home. Once in a 1 day in a week. I'm sorry, 1 day in a week we don't mind working from home, but it can't be a permanent feature. We must all remember, life is not all about working alone or working only. We are social animals. We need to interact with our colleagues. We need to interact with our friends, and we need to, as Sangeeta said, we need to experience the outside air and outside world. That is how one needs to, in addition to working, one also learns a lot when you interact with people. So that way, working from home is a concept which is right now we are forced to follow it, so we are following it. But given a choice, I don't think that this will happen for long. And the people will be raring to go out now. And as soon as the lockdown is lifted, you can see the city steaming with people. And from whatever I have heard from China, I believe after the lockdown is lifted, 100% of the people are reporting to work, and not working from home is more an exception. So you'll agree with me probably 2 to 3 months from now. And in the industry we are in, if my engineers say I will work from home, no construction will happen. So sure. That way only certain areas of work may happen, but not all. So I must also say, when Netflix and all those came, people thought nobody will go to multiplexes. On the other hand, the business of multiplex has gone up. And similarly, just because e-commerce, Amazon and Flipkart have come, it is not that malls and other retailers have suffered. Year on year, our malls have seen higher business, higher walk-ins. So, and also so far the contribution of e-commerce people is just about 3 to 4% of the overall requirement. Yes, that may go to 5 or 6% or over a period, even 10%, but it's not, they cannot fully take over the business. That won't happen. So malls are here to stay, offices are here to stay, but I want to, since Ramesh is also here, I must say, connected with offices, say most Western companies, they provide 200 to 250 square feet per person when they plan their office. But when these companies come to India and developing countries, they have reduced it to 125 square feet few years back, 100 square feet per person subsequently, and now it may be even 80 square feet per person. With the result, they're packing more people in the same office space. Now with social distance becoming important, I think that concept should change. They need to give a better social distance within the office premises and not pack our IT professionals or back office people like sardines. That should not happen. They need to give much more space, breathing space, interaction space, and that in itself will help improve the demand for office space. That is what I think.
I think this is it's a good debate. There is obviously, I think Indian people are already much more, they always need more people around. In Sweden, they say 50% of households are single person households. Can you imagine? Yeah. Single person households are 50% households. So they obviously everything coexists at the same time. What percentage will change? Only time will tell. So here's a poll, but before that, let me also thank our sponsor JSW Cement for sponsoring this webinar. We have a poll here. Will gated communities be the preferred option? Kindly vote in the poll, and I think we already have a very strong response in favor of the gated communities.
Pratap, I wanted to add a few things to this discussion, if I may.
Yeah, Sangeeta.
What is, nothing in life is binary. I don't think really everything will be at home and nothing will be in office, vice versa. But the shift, there will be a distinct shift, and there will be duality of existence. We will need office spaces, but maybe at a point of time, the number of people in the office will be different from what it is today. We will need home spaces, but the way, and I think as human beings, we have always seen that we are adaptive and resilient. So we design reimagine spaces or anything in our lives accordingly. So the duality is the key thing which will be a major move forward, and not the compartments of home and office. That's what I wanted to summarize.
Correct. And one more poll here. So we've got 82% of people who feel that gated communities would be a preferred option, which is a strong, tip for developers. And this is another one. Will technology to communicate, entertain, work, shop play a more dominant role in times ahead? So come to communicate, obviously we have technology. Entertain, of course, like the panelists mentioned, Netflix and various others. Work from home, work or video conferencing and all of that. And shop, of course, e-commerce. So please vote on this as well. And yeah, obviously again here is a very strong response towards in favor of this.
Pratap, can I give my views on work from home if you have 30 seconds?
Yeah, 30 seconds and we'll need to get into questions from the audience. Yeah.
Only the challenges of work from home. We don't have good internet connectivity in India. You can see us speakers itself not being so clear. Sound quality is a big challenge. We don't have study rooms in India. We work, we still live in joint families in India. Clients are worried about data confidentiality. Clients are worried about firewalls. A lot of thefts have happened of data over the years. That's a big concern, especially in an emerging market like India. We also hear from a lot of our clients that STP and SEC bonding, which has been relaxed by the government now, that'll obviously come back. So there are enough reasons while work from home may not work in a country like ours. Okay. Let's go on to questions. Meanwhile, this screen shows you about our nominations open for Construction World Architect and Builder Awards. You can go on to site cquabawards.com and nominate your projects in case you have you wish to. There are questions from the audience which I would like to now take you through. So everybody is very concerned and wants to know when the construction projects guidelines issued, when they can restart. And I think generally we address this, and I think because with the monsoon season approaching, it appears that somewhere in month of August is when really post-monsoon, I think things will start in a very, very cautious manner, as Sangeeta mentioned, in a very cautious manner to restart the projects. But obviously work progress is going to be slow. So RERA will have to take a very lenient view of this whole situation right now going forward. So we have also discussed internationally there are developments where use of LED lights which actually act as disinfectants can be used to sanitize zones, work zones. And if that were to come, there is already a company abroad commercially bringing this out. If that were to actually come to India, you can imagine, you can bring that lighting within the office, within a workspace, within a factory, a warehouse, and actually disinfect spaces. So that is an anti-microbial kind of lighting on LED. That can really have a major impact in time to come in resuming everything else. There are some questions on whether land prices, etc., if they were to come down in this whole issue, which would that enable builders to reduce prices? Would you like to comment on that, Mr. Jaishankar?
Undoubtedly, if the land prices come down, undoubtedly the prices will come down. See, wherever, particularly in the affordable housing segment, if the government were to allot lands to the developers at very reasonable rates, the developers will certainly reduce the prices and offer it. In fact, we have a large 6,000 apartment project near Bangalore airport where our selling rate is just 4,000 rupees because government had allotted us the land a few years back for affordable housing in an industrial location at an affordable cost. So that is why it is possible to offer at 4,000 rupees a square foot. But in the open market, the land prices are huge. And I think either you mentioned earlier about if the guideline value or if the rack rates of the government, they go on pushing up year after year, there is no way prices can come down.
Sangeeta, would you like to take this? What is the possibility of businesses, especially IT, ITS, shifting from tier 1 to tier 2 and 3 cities? Can't hear you, Sangeeta.
I think
yeah, okay, yeah, now I can hear you.
This big boss is playing truant on us. Okay, coming back. So the first phase of my movement of IT and ITS to more than urban sectors had already started. There is enough capacity, I would like to share with you, which is there in these tier 2 cities, and this is an opportunity for the tier 2 cities actually to garner market share. And I can see that happening. In fact, I'll just shift gears to another opportunity in the real estate space, which is the industrial real estate. Since you spoke about work, IT and commercial, this is an opportunity for a country like ours, and there has to be collaboration between the government and developers like us who are in the industrial real estate space, how we can geographically shift some of the businesses, the manufacturing into our country. We have not succeeded earlier. I just thought this is something which I want to reach. We are talking to people, but I thought it's an important element which we have till date let countries like Vietnam, Thailand and Myanmar take a caucus snook at us.
Right. Ramesh, what do you think about FDI? How FDI will get impacted for real estate?
I think FDI will reduce a little bit. We have seen in these kind of situations how typically funds go back to their safe zones, the countries where they come from. A lot of money in India also came from sovereign wealth funds. That kind of money will be called back for COVID-related activities to protect their own economies, to offer better medical facilities. So that's something we need to be ready for. But let's also remember that the amount of money which is coming to India, the $6 billion of FDI per year which has come over the last 3 years, that's negligible compared to what the global size is. Globally, that size is 1 trillion a year. So 6 billion is like 0.6%. We are like a small bit in that. So it doesn't make too much of difference. But I think it's a matter of time. We saw that in 2008-9 also. Funds went back, but they came back also. Within a span of 12 to 24 months, they came back. So FDI will come back. But one thing we need to remember is the sector which always bounces back the fastest after any downturn across the world, we have studied that, is always the office sector. And I believe, like Sangeeta said, industrial and also office, both these sectors will continue to see FDI coming in, because a lot of that money has also been raised for India-specific investments, and that will continue over a period of time.
So I think, like Sangeeta said, if India is able to meet this challenge of COVID and we are able to successfully hold our numbers down and therefore get back to work quickly and therefore attract maybe companies, industries from China into India to set up base out here and grow this market. Obviously, I think real estate will have demand if there are people, companies shifting from other countries to this country. So we need to keep our country safe and available for this kind of an investment to take place. So I'll just take one.
Pratap, just one point. Just one point, one data point. Real estate funds across the world are sitting on $330 billion of dry powder, which means uninvested money. They're sitting in 330 billion. This is just real estate private equity funds, and general private equity is sitting on 1 trillion, which includes this 330 billion. So there's a lot of money in the world. And like Sangeeta said, this is the government's golden opportunity to make India into a manufacturing destination with all this thing happening around China and companies wanting to de-risk. If the government misses this opportunity, I think we'll have to wait another 10 years. The government can, the central government can identify, let's say, 4 or 5 state governments, and very simple things, like a very simple word, that SEZs, which we have stopped talking over the last couple of years. There's big manufacturing industrial SEZs, just give land availability and get the approvals in place. India has the biggest opportunity in the last few years to get back to that manufacturing, making India a big global manufacturing hub. I hope the government is listening, and if people like Mr. Jaishankar, who have that say in many government circles, this is the time to push the government for making India a manufacturing hub of the world.
Dhruv, last comment, 30-second comment, please.
So I agree with Ramesh on that fully. If you look at a country like Japan right now, it's created a fund for its companies to actually spend money to take the manufacturing out of China. Now, when that is happening globally, and a country like Japan can do that, I think it's a massive opportunity for us to be able to do that. Having said that, we also have to keep in mind that we need to be competitive from a price perspective to China. China has a full supply chain and ecosystem around various manufacturing categories, and India needs to very, very quickly be able to get its act together to build those ecosystems around various categories in order to take advantage of this. But I agree wholeheartedly that this is a 1-in-100-year event, which I think will open up opportunities for various technologies, various sectors, various countries at various levels. And I think this is a great time for India to take advantage of that.
Sangeeta, your 30 seconds.
So I will go to the very traditional Maslow's hierarchy and go to first we need is physical and physiological personal safety. And that's what the government and all of us should focus on. So life and then livelihood. And if livelihood is something the government has already, Mr. Modi has been speaking about it, that Jaan and Jahan is something which has entered our dictionary, because real estate is after all the second, sorry to say, even a home being a primary requirement. When you buy a home, when you are feeling secure about the personal finances, so that's where the country, that's where I reiterate, as all panelists have also done, we must look at how do we make livelihoods safer.